Hello, and in this video we're going to look at where to post all those support grants and everything else your business may have received during COVID-19.
It's real, 'cause I can get him out of my head.
Hi, my name's Aaron Patrick and I'm a chartered accountant and certified trainer for QuickBooks UK. What I'm looking at today is going to go through with you where to post all your transactions when it comes to the money you've received from the government in regards to COVID-19. So maybe your business has received one of the job retention schemes, or maybe they've got the business relief fund coming from the council themselves regarding your rent and rates. Or maybe you've had one of the bounce back loans or any of the other loan schemes that have been available. Now, if you've had any of them, it can be really tricky to understand whereabouts to post it into QuickBooks itself. So that's what we're going to have a look at now. Okay then, so what we've got in front of us is a typical client. And within this typical client, if I jump into the banking section, you'll notice that I now have a load of income coming into the bank. And this is to signify that they've actually received some of the government grants on offer. So if I just run down what we've got here at the very bottom there, we've got the NatWest bounce back loan. So this is assuming they've got a bounce back loan coming through. They've got the local council, makes it a little bit bigger, you have to see this properly. Local council, that's the grants for small businesses. We've got the business emergency relief fund coming through. One of these, there's two different HMRC ones here. So if I click into it and read the bank detail, you've got HMRC JRS, so that's Job Retention Scheme, and also we've got HMRC CEIS, so that's the Self-Employed Income Support Scheme. So with those items that have come in the bank account, it's interesting, or it's going to be useful for you to know how to actually put them into QuickBooks themselves. So first and foremost, let's deal with them chronologically. So what I'm going to do is I'm going to start with the very top one. And the very top one in this case is the grants for small business. That should have been the first one people have received, £10,000. This is based on basically the client that has had small business relief in the future, or in the past, should I say, regarding their rates. And at this point, the government has, once you've applied for it, the government has actually given you a lump sum. Now, this is actually classed as a grant. Now, when it comes to putting grants into the software, one of the things that you should really be aware of is there's going to be two different kind of camps into where this should sit. Now, from a statutory point of view, doing a statutory set of accounts, then ideally what you would want is those grants to offset the expense that you've incurred in that particular year. So in this case, because it's related to rents, rates and everything else that goes with it, then really it should offset against those expenses, reducing that and showing you a true value in your statutory accounts. But when we're dealing with management accounts, which is primarily what you guys will be putting this in for, then there's no harm in you creating a brand new account called grants, which gives you the ability to keep an eye on those grants coming in. So you've got a kind of control mechanism within your business so you can see where those transactions are. And also it gives you an opportunity to have the chance to go in and make sure that from a clean point of view, you can see how much expenditure you're still incurring on the cost of the building. So what we're going to do here is we're going to put this against a brand new account. Now the account we're going to call it, we're going to make sure we've got deposits shown. Supplier and customer, there's nothing wrong with you calling it your actual council as well. So I live in Derby, so I can call it Derby City Council. I'm just going to add that as a brand new customer. So what we're going to do is going to create a brand new category for it. There's nothing wrong with calling it grants itself. And then the key part is really from the account type. I would tend to put it to other income. Make sure my detail type is going to be other miscellaneous income. Call it grants. Now if you want to, if you're receiving multiple grants coming in, there's nothing wrong with you having grants and maybe job retention scheme, and so on and so forth. But for this exercise, we're just going to put them all to grants, just so they've been posted. Now the only thing I need to consider now is the tax code. Now for these ones, I'm going to put all of them to no VAT. Now there's an argument to be made how these could be exempt as well, and that's definitely a valid argument, and that's definitely something you should consider from your VAT perspective. But the reason I'm putting these to no VAT is because I don't want to affect my partial exemption calculation that I have with this particular client. So I'm going to go in and add. Then I have to consider my next one. So this is my emergency relief fund coming in from the council themselves. So again, there's nothing wrong with me putting this to the grants. Now this particular fund was just one that was a small fund that was given out to businesses, and all you had to do was apply for it to your local council. And again, I'm going to put that to no VAT and press add. Now the next couple are going to be a little bit more tricky. So the next one that we've got here is our job retention scheme. Now because this is something that's going to happen on an ongoing basis, I would probably advise you do separate this one out. But it's still going to be classed as a grant, but this time let's call it job retention scheme. I'm going to put it to the same other income and the same fact as other miscellaneous income, and this time I am just going to put no VAT directly in the default VAT code and press save and close. Because remember, you're going to be receiving this, or you may receive this on a month-by-month basis, so it's actually going to be really useful for you to split that out, so at any point you can come back to it and just make sure you have received all the money you accounted for. Add that one. And then finally, at the very end, we've got the self-employment income scheme. I would just put that to that other grant one we created, so create it in the same manner, and again, no VAT on that one. So there are your grants being dealt with. Each one of them, you're just going to create a brand new account called grants. You're going to post it directly against there, and then that means that when it comes to statutory accounts, your accountant, or when you come to do your own statutory accounts, you could move them against the relevant expense category as it relates to. That way you're going to have control, you're going to be able to see what money has been received in. When it comes to do things like cash flow forecasts and everything else, you're going to be able to adapt them a lot better, because you're going to see the true cost coming in, the true income coming in, and you're going to be able to see what's related to another. And that's going to give you the opportunity to go through and make sure you've absolutely got it nailed on in terms of true outlook of income versus expenditure. Now the next one we're going to consider now is bounce back loans. Now loans themselves, treat them exactly how you would treat any other loan. Don't differentiate these particular loans from any other loan that you've had in the past. So but let's look at ways or tips and ways you can make it a lot easier for yourself. First one being that most people would actually go and put this category as a loan itself. So there is actually going to be other loans sat within your standard chart of accounts, and you have the ability to create other chart of accounts current liabilities. Well, personally, what I like to do with our clients is I actually like to create a brand new loan related to it. So I'm going to call this NatWest Bounce Back Loan. And I'm actually not going to use the current liabilities, which is perfectly acceptable if that's what you do. I'm actually going to create this a cash at bank on hand. Now the reason for that, I'm just going to call it current account. And the reason for that is because I want to be able to keep an eye on this. I don't want to forget about this loan. Especially if you've got the bounce back loans, you've got some really nice incentives and bonuses there, where for the majority of the loans, you don't have to pay back for the first 12 months. So when it's coming to consideration for my business cash flow going forward, I don't want to forget about it. I want to always have that at the forefront. This is something I've got to pay back at some point. Unlike the grants, where at this point there is no clawback or payback system related to them, from the bounce back loans, we know we're going to have to repay them at a later date. So it's going to be better off for us if we put them somewhere where we can find them nice and easy and always remember it. Beauty of putting them in as a cash account is twofold. First one, we're going to press save and close, and press add. Oh, don't forget your VAT, so no VAT on that one. And when I press add, that transaction has now been accounted for. And if I go to dashboard, it's sat there looking at me, and I can see that straight away, and it's going to give me confidence and let me know and remind me that I've got to deal with that, and it's not going to go missing. And every time I make a repayment against it, I just put the repayment there. And if later down the line, after the first 12 months, you incur an interest on the loan, then it's going to be a nice and easy way of just accounting that interest. You literally either click into the loan, and actually go in and just add a new transaction. So down here I could add an expense, and then I could put that to my interest as I'm going forward. Or with some bank accounts, and it depends on who you bank with, but don't forget that you can add account, and it depends on which bank account you're using, but you may have an opportunity to add that directly on the screen. Therefore, any movement will appear directly on your banking screen. It's going to make it a lot easier for you to process those transactions going forward. Let me take a moment to talk about our sponsor, Boffix.com. Boffix.com. What they do differently is they have one subscription to offer all your business needs. It could be accounting, virtual office, call handling, IT services, legal, or workspaces. They've got you covered. From an accounting point of view as well, they can get you options where you can actually look at fantastic deals, and they can even offer you QuickBooks subscription. If you want a QuickBooks subscription, these guys have got you covered. They'll be able to offer you the best rates and best deals you've got going, and offer you support on top of that as well. Also, if you are interested in them, you can look at any price point that you want. So whatever your business needs, whatever your financial commitments are, you can go along, put in the details you need, and then you can decide how much it's going to be worthwhile to you. So thanks for Boffix for supporting this video, and hopefully you guys can use them to be able to grow your business. And if I go and look at the reports that's done since I put those transactions in, you'll notice now that my grants are appearing down the bottom here. So they're the income that's coming in other income. So it's nice and split from the other income that I get. And then you can see then that I've got my JRS and other income that's coming through. Now again, the reason I've got my JRS separate is because that's going to be an ongoing support mechanism. So I would want to see that income coming in here, and I want to be able to split that. And then the idea would be that it should match against gross wages that I'm actually having to defer or to use as job retention. And that's it, a real quick look of where to post those transactions as they start appearing in your QuickBooks file. And there you go, that's you posting your transactions into your QuickBooks file. As you can see, the majority of it's quite straightforward, there's nothing too complicated about it, but I think just the only thing to remember is just to create those new accounts, keep them nice and separate, and you're going to find it a lot easier. And when it comes to those bounce back loans or any of the other loans available that's coming through, just treat them as a standard cash account if you want to make it so it's easy for you to be able to record your transactions going in and out. I think you'll find that a lot easier. There's just one more tip I'd say, and that's if we just jump back to that banking account here, you'll notice here I've got a HMRC payment, and this one is my VAT. Now, just as a reminder, you get that deferment option when it comes to payments relating to the 31st of March 2020. So you may have had the opportunity to defer that. Now, it would be highly recommended for most companies, I would thought, to take advantage of it if you're in the position to do so. And if you have done that, I think the only thing to do is use QuickBooks as a way of reminding you to, again, that you've got that payment. Now, there are two ways to do that. One of the ones is just like this NatWest loan we've got here, there's nothing wrong with you in creating another cash account that says VAT due 31st of March 2021. You can have that perfectly put on here as just a liability, so you'd put credit against the actual account itself, and then you'll debit your VAT suspense account. If you're not comfortable though using debits and credits, the other option is to use your expenses and your suppliers. Now, the reason I say this is if you've got the ability to post it as a bill, then what you could do is put your due date. So I can, and there's nothing wrong with me doing this, I can create a new supplier called VAT HMRC if I wanted to, and then from here I'll jump into my VAT and I could create a new bill, and the most important thing is that due date 31st of 3rd 2021. And then again, my category would be VAT suspense, and it'll be the amount that I've got to pay. So let's say 3,250, for argument's sake, and then press save and close. What that will do, that will mean that now my VAT suspense has been reduced to what it is, and now I've got it on the creditor's account just there. Now, from an accounting point of view, that's not perfect. That means your accountant might have to change around a little bit your trade debtors figure at the end of a year. But at least for your point of view, when you're running your business, you know you've got an amount that hopefully won't get missed because it's going to come up on all your reports to say that your due date is the 31st of March. But do remember though, you do have the option to stick it here in your bank account, so it's just a debit and credit to make it appear there. And the only thing you'll need to do is make sure that when you create a new account, so if I was going to do that, I would do new, journal entry, I'll do today's date, or the date in which you deferred. VAT suspense is your important one. You want to debit 325, and then you want to create a new one called VAT deferred. You can call this whatever you want. VAT deferred March 2021. And the important thing is you can treat it as a cash account. It can be any of these ones. Cash at bank's fine. Press save and close. 325. Save and close. Means every time you log into QuickBooks, on that right hand side there, you'll notice there's the VAT deferred March 2021 hitting you in the face, and hopefully then you can be reminded about it going forward. And that's it. That's all the tips and tricks we've got in terms of getting that income put into QuickBooks. The reason that it's so important though is, remember, the key part now is about, as your business is starting to try and get back on top and trying to build itself back up, you're going to need to have access to all those reports. So remember that last video we looked at, where we looked at making sure that you could have everything included, and you can look at how you can prepare your accounts and prepare your QuickBooks file for looking forward, for looking at cash flow forecasts and everything else. QuickBooks is about to release the cash flow section within QuickBooks, so we're going to explore that as soon as it arrives, so that we can make sure we've got our companies all set up perfectly for what's coming ahead. The only way we're going to be in that position for looking forward is making sure we've got everything looked at, up to date and nice and clean and tidy. So use this opportunity, post everything you've got, including those ones. I know a lot of my clients left those alone because they were a little bit confused about where to put them and everything else. We just get them posted, put them in a grants account, and then we can make sure from a statutory point of view, when we do your accounts for you, we've got them all sorted. That's been me. I've been Aaron Patrick. Hopefully that's helped you get through and make sure you've got all your postings into QuickBooks, and I'll see you on the next video. Bye for now.
I say yeah. I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it's dark, I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want, I can be a fighter. I can be a fighter if you want. I can be a fighter if you want. Oh, the way that I feel, yeah, I know that it's real, 'cause I can get him out of my head. I don't care what we do, everything's feeling new. Even if we're staying in bed, my heart is saying yeah.